Welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, the screen isn't looking all that pretty this afternoon, given the fact that we are seeing a triple-digit cut on the index. In fact, we have slipped below that 25,700 mark, and right now, at this moment, we are almost near the low point of the day. Clutching on to the 25,600 mark. It's a 160-point cut on the index. Sensex also down, over 450 points. 83,500 is where we are at. And the broader end of the markets that weren't fine fettled till about yesterday, and even in the first half of the session, it was managing to hold on to slim gains, but even that has succumbed to selling pressure. 0.5% cut on the Nifty Midcap index. Breadth firmly in favor of laggards this afternoon. Almost 2:5. That's the NSE advance decline ratio. 870 shares advancing to 2,000 shares declining. So, not looking all that pretty. Portfolios will also see some bit of a pain as a result of the weakness in the broader end of the markets. Last time I checked, all the sectors were trading in the red. I think it was the metal pack that was leading the laggards list. That index was down 1.5%. IT extending its losses from yesterday. Over 1% cut coming in there. Realty that saw good traction yesterday has once again, succumbed to selling pressure. That's down almost 1%. Autos are down almost 0.8% or so. M&M reported numbers and they were above expectations, but no respite because the auto pack continues to trend the negative line. FMCG extending its losses as well. Pharma that saw good traction yesterday is once again under pressure. All the sectors, including the PSU Bank Index that has been outperforming, and how that has also succumbed to selling pressure, although the cuts there are pretty mild. In terms of the individual movers, then let's take a look at the top laggards list. It's Power Grid that's down over 3%. Numbers were disappointing, and of course stock clearly reacting to that. You have Coal India as well, that's down 3%. Tata Motors, Eternal, Bajaj Autos, some of these four-wheelers, two-wheeler names, and even some consumption names like Eternal are under pressure. Metals, as I mentioned, have been witnessing some bit of profit taking. So Tata Steel, Hindalco, these are among the laggards. Adani Enterprises is also down almost 2%. News just came a few minutes ago that the company's board has approved fundraise to the tune of 25,000 crore rupees via a rights issue. Aside of that, Adani Ports also reported numbers today. So Adani Ports, I think it was in the red last time I checked. BEL extending its losses, Tata Consumer in the red, Geofinance, L&T, Infosys, JSW Steel. So, the list of losers is a long one. However, if you look at some of the gainers, then Titan, good set of numbers. Brokerages also came out with positive notes. So, Titan among the top gainers, Bharti Airtel as well. Good set of numbers, a bump up in ARPUs as well on a quarter-on-quarter basis. So, that stock is up 2%. Although auto sector or auto index is down, M&M after good set of numbers is managing to buck the trend, up 1%. SBI as well, even though the PSU Bank Index is down, SBI is up almost 1%. Also some other sporadic gainers like HDFC Life, Dr. Reddy's and Shriram Finance. So, all in all, not looking pretty. Yesterday we thought perhaps we would resume the uptrend that we had seen the initial part of last week, but not to be. Of course, it is the expiry day jitters also that have kicked in. Just want to see what the India VIX index is doing. Yesterday it was up 4%, and right now it has cooled off slightly. But I think it's the expiry day volatility that's really playing out right now, which is why we are seeing a triple-digit cut on the index. A lot of individual stories are there, of course, which are reacting to good numbers. We'll take stock of that in just a bit. But before we do that, let me bring on board our guest for today. Joining me, Sneha Poddar, BP Research Wealth Management at Motilal Oswal Financial Services. Sneha, lovely chatting with you. Off late, we had seen good traction in the market wherein we reclaimed that 26,100 mark on the upside. Earnings, have been fairly better than what the street was really working with. There are, hopes that a US-India trade deal will also come by sooner or later. The talks are ongoing, and of course, the US-China trade deal also worked out well. would you say that all that news, positive news, is already in the price, and are we expected to stay in this profit booking mode going forward for quite some more time to come, or do you think it will resume sometime soon? What is the next trigger? Because earnings wise, things are looking good, and looks like that is already being taken into account.
Hi, good afternoon. Basically, as you mentioned, market is awaiting a fresh set of triggers, which is currently missing in the market. And on the on the global front, there are few concerns with regards to the cautious outlook that was given by the Fed officials, wherein they are not really expecting any further rate cuts going ahead. So that is one concern which is there. Secondly, market somewhere is a little cautious, because it's been a long time and we have been hearing that the trade deal is likely to close soon, but still, the deal is taking a lot of time to conclude. So people are really they are questioning whether the deal is likely to conclude, or on what terms will it finally get concluded. So there are various concerns in the market. The numbers have been good, as you mentioned. It has been better than expectation, and though there are downgrades, but then the intensity has reduced drastically, so that is definitely providing support to the market. But then, unless and until the deal concludes, the market is likely to remain range bound, and probably the details of the deal would actually provide the next direction to the market.
All right, details of India US trade deal, that is keenly awaited, and perhaps that would be the next trigger that the markets are really waiting for. But let's talk about the rate cut scenario or the rate trajectory back home as well. RBI has already front loaded its rate cuts, but most experts were of the view that another one could be in the offing as well, either in the December policy or in the Feb policy. Uh, what do you believe? Do you believe another rate cut is coming in December or February, or do you think we are pretty much done for this financial year?
So we are anticipating one more rate cut to happen, and most probably it's expected in the December month monetary policy itself. So if it happens, then the margin improvement, the bottoming out of the margins for the overall BFSI space will get a little delayed, because earlier it was anticipated that the no more rate cuts will happen, and thus for these BFSI companies, Q2 will mark the bottoming out, and probably from Q3 onwards the improvement will start kicking in. So probably we can expect a 1 quarter further delay in terms of margin recovery, but definitely the benefits of rate cut in terms of the pickup in the demand is has been quite visible in the month of October, and that really that should help to offset to a certain extent the pain on the margins in the Q3, because the overall the loan disbursements are expected to be on a very healthy note for the Q3 for these BFSI companies.
Hmm. Sure. Since you speak about margins, do you think PSU banks are better poised when it comes to margins, given the fact that SBI, that reported numbers just a while back, has also managed to beat expectations in terms of its margin performance? Even net interest income came in above expectations. Overall, it was a beat on all counts. Although provisions were slightly higher, but slippages came down. As I mentioned, margins also saw an uptick. Uh, Things are looking pretty good. Asset quality has also strengthened, so to say. And even for other banks like Indian Bank, Bank of Baroda, things are looking up. And we've already seen quite a good rally play out in PSU banks. Private banks also did fairly okay, barring ICICI Bank. Perhaps it saw some bit of a slowdown in terms of loan growth. But do you see room for more re-rating when it comes to PSU banks? going forward, or do you think it has already played out, given the kind of rally that we have already seen? How are you looking at the entire financial banking space, so to say? Would you tilt more towards PSU banks, or would you say that there is a catch up that's waiting to happen when it comes to private players? How do you look at it?
Okay. So, Nandita, basically, for in case of banking, the numbers has been good across the space. I mean, barring one or two names, PSU banks definitely, I mean, the numbers have been quite strong, both in terms of loan disbursement, in terms of asset quality. So, given that the PSU banks had initially just not participated, and in fact, they had witnessed a sharp correction. So, I mean, there's a lot of comfort in terms of valuation, and that really reflected in the recent up move that we saw in the PSU names. Moreover, from this junction now, how I would look at the banking space is that the recent news flow that came with regards to the changes in the bank Nifty. So with the weightages of the large
Hmm.
private banks coming down, the mid-sized banks weightages are expected to go up, and more new banks will get added to the index. So that will actually
Hmm.
get the attention of the mid-sized banks. I mean, which was earlier very limited. So largely earlier, large private banks used to drive the entire bank Nifty, but now the smaller and the mid-sized banks will be able to I mean, the movement in those banks will also have now influence on the bank Nifty. So from that perspective, I'm quite optimistic
Hmm.
on the overall mid-size banks, and among them. So while we like PSU mid-size banks, but even these mid-size private banks, like for example the Federal Bank, RBL Bank, their numbers were also very good, and even these smaller banks can benefit from the recent announcement.
Hmm. All right. Tilt is more towards mid-sized PSU banks and even some, mid-cap private names. Let's talk about the metals pack as well, because this is one sector that has been doing well, even when the markets were the benchmark indices weren't doing all that well. This is one pocket that yielded gains for investors. We've seen a strong rally, and it has not been limited to a single segment. Instead, the entire value chain from steel to copper to aluminium, all of these participated in the rise. Are we seeing the start of a super cycle in metals? Resilient domestic demand, policy support, and company specific upgrades are also some of the key drivers, apart from the fact that globally metal prices have been on a tear. What do you like in this space, and would you be cautious on the longevity of the rally, given the fact that metals as a pocket is cyclical in nature? So, how are you approaching this entire universe?
See, what I believe is that the metal, it will continue to benefit. I mean, the cycle has just started after a long time, and given the the strong prices on the LME market, and given that the globally, if the China US deal concludes, definitely the it will provide a big boost to the overall global demand. And even when we talk from the Indian market perspective, the overall domestic market is doing very well because the government is spending a lot on the infra side, so there's a lot of demand which is coming from the domestic side. And if the global demand also comes in, then obviously these companies will benefit both from the domestic as well as the global demand. And with the prices holding up well across the metals, be it steel, copper, aluminum, I mean, all the prices have been on an uptrend. So obviously the profitability will get a boost both from the volume and the pricing angle. And moreover, there were talks with regards to the safeguard duty being implemented in case of steel, and even aluminum industry was
Hmm.
demanding the implementation of safeguard duties. So if these steps are implemented by the government in coming months, that would further provide a lot of strength to the metal industry. So there are various reasons for for me to believe that from here on, I mean, it's just the start of the cycle, and probably like it could last for at least like medium to I mean 6 months to 1 year. At least the cycle should definitely last.
Okay, the metal upcycle should last for another 6 months to 1 year or so. But let's talk about the recent IPOs as well. Lenskart IPO, of course, it's the last day, and it's seen good institutional interest. Of course, globally, a lot of giants have participated via the anchor book, and retail demand has also been there. I think the issue is subscribed 5 times, if I'm not mistaken. But there's been a lot of debate around its valuations, the kind of valuations it's seeking. The price to earnings of 230 times, 10 times sales, etc. How are you viewing this IPO? Do you think this price justifies the kind of future growth plans that the company has?
So we have looked at Lenskart from a different point of view. So you see, these are the startups wherein I mean the company has just turned profitable. So looking at P really doesn't make sense. Now, if we look at it from the price to sales angle, then obviously like it's trading at roughly about 9 times the Q1 FY26 price to sales. But if when we compare this with the other startups, it seems quite I mean quite fairly valued. In fact, it would be a little better place from that angle. And what I really look at is the business model, especially in case of these startups, because when the business model is good and unique, then it would be I mean these startups can really ramp up their volumes very fast, and for them it becomes more of a volume kind of play. So I mean we have seen the story unfolding for Eternal, Swiggy, Paytm. I mean how these startups they came at high valuations. They had their own journeys, but then eventually, because the business model is good and it's I mean it's very robust and fast, scalable model. So because of which they have been able to quickly turn around their business, and now that really reflects in the sharp up moves that we have seen in those stocks. So similar kind of story can be seen in case of Lenskart, because it has got a very unique business, and there's no competitor as such in the Indian market. In fact, the kind of integrated model and the kind of uniqueness that they bring to the table in terms of eye testing, I mean it's just a matter of time, they would be quickly able to ramp up their overall business to smaller towns. I mean they have already done that through remote eye testing, but with the fundraise they would be able to further enhance their reach, and with the larger volumes their business will be able to quickly turn around. So for these startups I would suggest to look at the business model, at their the potential that they bring to the table rather than the valuation. And when we compare it with the similar startups, it seems quite in line with them.
All right, got your point. Focus more on the business model rather than the PEs. But let's talk about go back to the results season, because there have been quite a few individual stories, and stocks have reacted pretty positively to their numbers. We've seen some stocks clocking 10%, 15% kind of rally on the back of good numbers. If one were to look for good stories within the mid-cap basket post earnings, anything that any pocket that catches your eye?
Okay, so today, Suzlon came out with numbers, and it was stellar numbers, almost 4 to 5x kind of profitability jump that we saw in Suzlon. And their order book is at all-time high. I mean, 6.2 gigawatt of order book. In fact, they have been guiding quite some time that they would at least maintain the minimum 5 gigawatt order book. So, such a strong order book provides provides a lot of comfort, and the execution has been very strong, and that has led to the strong improvement in the overall EBITDA margin. So a very good set of numbers, and the stock recently has witnessed healthy corrections. So from these levels, I believe, I mean, given their execution capabilities and the local sourcing of the raw material, which provides a lot of operating leverage to them. So keeping these in mind, Suzlon can be actually looked at from the long-term point of view. In fact, we have a target price of 80 in that stock, so that gives you 30% plus kind of upside.
All right, Suzlon, stellar set of numbers, and expect 30% upside from current levels. But anything from the discretionary consumption lot that you like? Of course, staples, they are yet to see the impact of GST cuts on their earnings. Of course, this is the GST-led disruption that has played out in the second quarter earnings. But within the discretionary basket, some of the green shoots are already visible. What do you like?
Okay, so we like the value retailers like, Vishal, Megamart, V-Mart. I mean, we are expecting very good numbers for them. In fact, globally also it has been seen that the branded players are not really doing that well. In fact, the shift is being seen more towards the value retailers, and that trend is also being witnessed in India. And for past few quarters, the numbers that are being declared by these value retailers like V-Mart, Vishal Mega Mart, or V2 Retail, I mean, these companies are coming out with very stellar numbers. So though their numbers are not yet out, but again, we expect that strong momentum to continue in the numbers for these companies. So one can really look at these players. Currently, we are very positive on VMart, and we have a target price of 1055. So one can look at this, or we are also positive on Vishal Megamart, wherein we have a target price of 170. So both the counters can be considered from the long term point of view.
All right, those are some of the stocks that of course is on Motilal Oswal radar on the back of good earnings as well. But thank you, Sneha, on that for that matter, for joining in and of course sharing your thoughts with us. It was lovely chatting with you, and I look forward to your joining us on our morning shows as well sometimes.
Sure, sure. It would be my pleasure. Thank you.
Thank you. Thanks a lot. On that note, before we bring on board our next guest, let's just quickly take a look at what the markets are doing. Now we have literally slumped to the low point of the day, 25,591. That's where we are at. We've given up the 25,600 mark, and looks like we are poised to end below that level as well. So that becomes 25,584. That's the intraday low, and we are very, very close to that, 25,591. Not a pretty looking screen this afternoon, because there is deep red across the screen. All the sectors trading in the red. Mid caps that had just about hit fresh 52-week high yesterday have also succumbed to selling pressure. So it's a 0.5% cut on the Nifty mid cap index as well, and breadth also not looking all that great. But do we expect this weakness to continue throughout the week? Tomorrow, of course, it's a market holiday. Given the fact that tomorrow, of course, it's a market holiday, it's a truncated week, we all know that. But do we expect this weakness to extend into Thursday as well? Let's bring on board our our next guest. Joining me is Osho Krishan, who's from Angel One. Osho, lovely chatting with you this afternoon. Broken below that 25,600 mark. What is the next support? And of course, it's the expiry related volatility at play or weakness at play. Do you expect it to extend to Thursday as well? What's your take?
Very good afternoon. Firstly, thank you for inviting me on the show. Well, yes, no doubt we have seen some kind of profit booking from the higher levels, but I am expecting that any dip towards 25,500 should not be ruled out, especially after the rally that we have seen in the month of October. So for me, the technical support or even the derivative data suggest 25,500 to be seen as a very strong support levels. So in the coming trading sessions, if there will be any further correction towards 25,500, one should look for buying opportunity at those levels, because overall there has been a strong breakout from the zone of 25,500, and even there is a significant put writing in the upcoming weekly expiry contracts as well. So I'm expecting that, yeah, from here onwards another 50 to 80 points of dip can be seen for Nifty, but that should be seen as buying opportunity. While on the higher end, again 25,800 followed by 26,000 is the positional target, but there is no sign of caution in benchmark index as of now.
Okay, no sign of caution as of now. 25,500, of course, as long as that remains intact, nothing to really worry about. Buy on dip opportunity. Same for Bank Nifty. Today, of course, it's down 0.5%. Yesterday, we saw good traction, 57,800. That's where we are at. We've taken out 58,000. But here, what would be that flow that you'll be watching out for, and which are the stocks that are buy on dips when it comes to the banking universe?
Firstly, for the index, Bank Nifty has not seen that much of correction as we have seen in the Nifty 50 index. But for banking index, I am expecting that the support is somewhere around 57,600 to 57,400 spot levels, which was also the breakout zone. So I'm expecting that any dip towards 57,400 should be seen as a buying opportunity for banking index. But there should be a strong accumulation or a strong traction in some of the banking and financial counters. For me, I expect momentum should be seen in Bajaj Finance. So the first counter which is into my buying radar is Bajaj Finance. There are multiple developments. Firstly, the counter has retested the 20-day exponential moving average, and historically the same exponential moving average has provided very strong cushion to the counter. And in today's trading session, the counter have seen a kind of a decent rally from those levels. So I'm expecting the momentum to continue. Even the derivative data suggests long addition in Bajaj Finance. So I am expecting a decent movement in this counter. 1080 to 1090 will be the first target. And once it breaches the zone of 1090, then we can see some further movement in Bajaj Finance. Even followed by HDFC Bank is one of the counter that seems very positive to me. So I'm expecting that in the coming days, there is a strong possibility for this counter also to start performing. In the coming 1 to 2 trading session, I'm expecting the zone of nearly 980, 970 to be seen as a very strong support levels, while on the higher end, 1000 can be seen as the immediate target for HDFC Bank.
All right, those are some of the banking and financial names to keep on your radar. But let's talk about just 1 minute to go for the markets to shut, less than 1 minute, so to say. But for SBI, of course, cleared that 52-week high today, 959.3. Numbers were good. Stock has been on an upward trajectory. How long before it hits the 4-figure mark?
See, overall, there is very positive momentum. And if I have to say the technical data, then it is strongly deviated from the short-term moving average. So from at current levels, the risk reward is definitely not favorable in SBI. But for those who already hold position in SBI, it will be advisable to keep trailing stop losses around the zone of 935. I'm expecting that the zone of 935 is a very strong support levels, and dips should be used for buying purpose. But if it loses the ground of 935, then from there onwards we can see some kind of corrective measure in the counter, and that should be considered healthy. But overall, the trend is very positive. Overall, the PSU banks have seen a very drastic improvement in the stock performance. So I expect the momentum should be there, and one should maintain their bullish position in SBI. I have no clue when the 1000 points will be seen on the technical chart, but till momentum persists, one should stay long in the counter, and even the dips should be utilized to add positions.
All right, momentum is very much on the upside when it comes to SBI, and of course, any dips should be bought into. But we've shut shop for the day, and of course, tomorrow is a break. But we've slipped below the 25,600 mark on a closing basis as well. The weakness is there. It's a broad-based weakness today. 175 point cut on the Nifty, over 500 point cut on the Sensex. Midcap index down 0.5%, Bank Nifty down 0.5%, breadth firmly in favor of laggards. all sectors trading in the red. Metals, are the worst hit. But expiry related weakness as well, although India VIX has cooled off slightly after jumping 4% yesterday, and even jumping above 12 level, but today it's cooling off slightly, but nevertheless there is across the board weakness, some bit of profit taking perhaps at play. But in terms of some movers on the Nifty 500, since we've already taken stock of the losers and gainers on the benchmarks, let's take stock of some of the movers and shakers from the broader end of the markets. What deserves mention on the upside? Let's talk about the positives first. A lot of earnings reactions, right? And the street has really rewarded good earnings. It has punished bad earnings, yes, but it has also rewarded good earnings, and it's always off late been about these individual stories within the broader end of the market. 3M India, that stock is up 17%. You have TBO Tech, that stock, good earnings, and the stock is up 6%. A lot of other names, but some other movers and shakers on the Nifty 500 index are the likes of Jyoti CNC, MRPL, you have Niva Bupa, Snyder, Chennai Petro, Balkrishna Industries, Ajanta Pharma, even Dabur for that matter. Although FMCG index is in the red, Dabur is seeing good traction, up almost 3%. Swiggy up 3%. It is going to consider a 10,000 crore rupee fundraise as well. Some of the other new age companies like Delivery are also up 2.5%. Indus Towers up 2.5%. Airtel will be buying additional 5% stake in the counter, which is why it's up and about. But on the other hand, you also have some reactions to poor earnings, the likes of Blue Jet Healthcare, that's down 10%. You have other names like Home First, NetWeb Technologies, Hero MotoCorp. October sales figures weren't all that great. That's why the stock got punished, down 4% today. PVR Inox is down, Bharat Dynamics is down, even BEL was down, by the way. Wokhard, after a very good move yesterday, is down somewhere around 3.5% or so. But let's talk about some of these names then with Osho. Osho, first of all, Indus Towers. Of course, Airtel board has approved a 5% additional stake buy in the company, and Bharti of course owns somewhere around 51% stake at the current juncture. Looking at the stock movement, it's down 8% in the last 3 months, but last 2 weeks it has done well to see a pickup. Do you expect this bout of buying to continue, and what are the next levels one should be working with?
Again, this counter has seen a decent breakout from the zone of nearly 365, and from there onwards has already tested the zone of 390 once, again retested the neckline. So technically there is a kind of counter trend or a bullish trend that has been formed in Indus Tower. Although on the higher end, the zone of 390 to 400 portrays a very strong resistance. So at current levels, it won't be advisable to start accumulating fresh positions, because even today's candlestick formation is a kind of a dicey, indecisive formation has been made. So better to wait for either some kind of profit booking in the counter towards the zone of 370 to 75. If it happens, one can look for buying opportunity, or if the counter breaches the zone of 400 on a decisive manner, then that will attract fresh buying position in Indus Tower. So there will be a conditional buying in this counter, either on the dips or wait for a breakout for the momentum to persist in this counter. Overall, the trend is bullish, but one should wait firmly at current levels.
Wait it out. That's the view on Indus Towers. But let's also talk about another mover, that's Hitachi India. Good set of numbers. Profit, in fact, saw a fourfold jump in the quarter gone by. EBITDA margins saw very sharp expansion. From 7%, EBITDA margins jumped to almost 16 or above 16%. The stock, of course, has seen a steady uptrend. It has rallied 40% in the last 6 months or so. Would you say that the stock perhaps could be approaching overbought zones, or what are the charts suggesting? Do you think this up move that it has seen in the last 6 months would have more legs going forward?
See, currently overall the counter was into a kind of a cooling off period, the counter have seen some kind of decent correction from the zone of 21,500 odd levels towards 16,600, which was the breakout level. So it has retested the breakout neckline and has again started some kind of positive traction. But with today's development, which is very significant, one should be on a conservative approach, because from here onwards, the resistance is nearby. Nearly 21,500, 21,600 is a kind of very strong resistance. So one should wait for a cool off. No doubt the counter is into a bullish terrain and there is a positive divergence in majority of the technical indicators, but dip should be utilized to add position in this counter. Near about 19,000 to 19,400 will be the zone where one should look for a buying opportunity, while on the higher end, again 21,500, 21,600 is a kind of very strong resistance. So one should look for buying on the dips in this counter and try to book profits around the resistance levels.
All right, try to book profits around the resistance level and perhaps buy on dips as well. But another stock that deserves mention is 3M India. Stellar quarter, brokerages have increased their target prices. The stock did see its biggest single day gain of 2025. In fact, it has gained in 4 out of the last 5 sessions. Of course, it has also turned positive for this year. Would you look at riding the momentum? What would you do with a 3M India, especially after earnings?
See, no doubt the counter was into a decent traction yesterday, and today also there has been very strong momentum in this counter. So definitely there is a follow-up buying position that has been made in 3M India, and I expect the momentum should be on the higher end. But looking at the traction that this counter have maintained, or this counter has gained in last 2 trading sessions, one should, for those who are holding the position, there is no sign of caution. Stay invested. I am expecting that in the short-term period, this counter can retest the zone of 38,000 in a very short-term point of view. But for fresh accumulation, better to wait for some kind of cool off or profit booking. If it happens, the zone of 33,000, 33,400 will be a decent zone where one should start accumulating, but in a staggered manner, because the development in the last 2 trading sessions has been very significant, and there is high possibility that some profit booking can be seen, because before the breakout, the counter was into a strong consolidation. So for those who already have taken position at lower end, they will try to book their profits at current level. So one should maintain a buy on dip, but with a staggered manner approach in this counter.
Buy on dip, but in a staggered manner on a 3M India. Let's talk about Suzlon as well. Good set of numbers. It's a tax write back that aided the net profit. Order book, of course, came in at a record high of 6.2 gigawatt. We had, an expert from Motilal Oswal as well, and because of the record order book, there is bullish call on the stock. In fact, they are expecting another 30% upside, and the target price is 80 rupees. I think it's a 1-year target on the stock. The stock did clear that 60 level today, and it has been in a decent uptrend in the last 1 month or so. Do you expect this stock to make a dash at its 52-week high, because it hasn't really been able to do that in a long time?
See, technically the counter have seen some kind of a strong consolidation around the zone of 52, 54 kind of a zone, and has again started some buying traction. So overall on a technical setup, the counter have seen a sloping trend line breakout. So I'm expecting that in the short term period, it might test the zone of 66 to 68. That is for short term perspective. And if it happens, then one needs to review the counter whether it will have some further momentum or not. If yes, then again 72 will be the next potential target in this counter. So overall, the counter is into a bullish terrain, with any kind of dip should be utilized to a buy position. Overall, I am expecting that 66 will be the immediate target that one can expect in the short term time duration.
Okay, that's the view on a Suzlon. 72 can't be ruled out on the counter. But one stock that was really punished today was Blue Jet Healthcare. Reported weak set of numbers. Profits were down almost 11%. Revenue slid somewhere around 20% or so. Margins also saw a contraction at 33.1% vis-a-vis 33.3% on a year-on-year basis. The stock is also down quite a bit in the last 3 months or so. 40% down on Blue Jet Healthcare in the last 3 months. Are you looking at a floor or looking at the stock approaching a floor at this juncture, or there is more to go?
See, technically, the counter is below all its major moving average, even short and long-term moving average. So obviously, the bearish stance is there in the counter, and I expect the momentum. Looking at the momentum in this counter, especially on the downside, there is possibility that this might test the zone of nearly 560 to 570 in the short-term period. So better to stay sidelines until it breaches the zone of 700 in the short-term period. Then only one can look for buying opportunity. Till that time, better to stay sidelines and wait for a consolidation or a breather in the counter before having a decent rally. So better to stay sidelines and wait for a breakout in this counter.
Okay, stay on the sidelines and wait for a breakout. That's on Blue Jet, but TBO Tech rallied quite a bit on the back of strong earnings. Any thoughts on this particular counter, or on any other OTA for that matter, Ixigo, etc.?
Firstly, for TBO Tech, this counter has been into a secular uptrend. There has been cycle of higher highs, higher lows, and I'm expecting that once it breaches the zone of nearly 1650 to 1700, there is high potential that the counter can see some kind of further continued momentum. So overall, it is into a positive trajectory. The short-term moving average is providing decent cushion to any kind of blips in the short term. So one can look for buying opportunity in the counter. The average trading volume has also started rising up. So technically, the counter is looking positive and one can look for buying opportunity. Immediately, 1650, 1700 is the first target for the counter. Once it breaches the zone of 1700, then even one can look for the targets of nearly 1880 or 1900 kind of a zone from short to medium term point of view.
All right, that's the view on a TBO Tech. Before I let you go, Osho, any recommendations for viewers? You already shared from the banking and financial space, you like the likes of Bajaj Finance and HDFC Bank, but any other stocks that are catching your attention for the next 1 to 2 weeks?
Yes, apart from Bajaj Finance, the other counter which is looking very positive to me is ICICI Lombard. Well, this counter have seen a very strong pattern. There has been a flat pattern formation in this counter, and it is likely to have a very strong breakout also. So I'm expecting that this counter can see very strong momentum in the short-term period. So one can look for buying opportunity in ICICI Lombard near about 2040 kind of a zone, keeping a stop loss of 2000, and on the higher end, the first target which is expected is nearly 2120. And once it breaches the zone of 2120, then again 2180 will be the next target that one can expect within a very short term span in this counter.
All right, ICICI Lombard looking good on the charts. Recommendation from Osho. With that, Osho, would like to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. We have a one-day break tomorrow, so hope you have a good rest, and of course come back and of course trade the markets from Thursday onwards. But good to chat, and hopefully we'll be doing that soon again.
Same here. Thank you so much.
Thank you. Well, that's the news from the market. Really failed to hold on to the 25,600 mark, and across the board weakness. But let's see how things really pan out going forward, because Osho believes that 25,500, as long as we hold on to that level, nothing really to worry about. But then let's shift focus to some stocks that are on our radar this afternoon. There were a barrage of numbers today, especially in the post-lunch time. We had SBI, M&M and the likes coming out with their numbers, but let's focus in on the big one, SBI then, and granularly look at the numbers. Numbers were a beat on all counts. The net interest income grew contrary to expectations of a decline. It increased by 3% on a year-on-year basis. Net profit for the quarter also increased by 10%. Again, that was better than what the street was estimating. But the improvement in profitability also came due to a couple of one-time elements during the quarter. The one-time gain came from SBI stake sale in Yes Bank, which contributed over 4,500 crores, and its stake in Jio Payments Bank as well, which was worth over 25 crore rupees. Now, asset quality for the lender also remains stable on a sequential basis. If you look at the gross NPA, it stood at 1.73% from 1.83%, an improvement of almost 10 basis points in the June. In fact, on a quarter-on-quarter basis, net NPA of course stood at 0.42% from 0.47%, also on a sequential basis. Asset quality, as the management mentioned, was at a 2-decade best for the PSU lenders. In fact, even slippages improved to 4,754 crore rupees at the end of the September quarter. That's down 40% on a quarter-on-quarter basis. Although provisions were slightly higher, both on a sequential basis, on a year-on-year basis as well. Now, looking at the margins, they were much better than expectations. Street was working with a decline of 5 basis points when it comes to margins, but they were higher. They came in at 3.09% vis-a-vis 3.02 on a quarter-on-quarter basis. Stock of course did manage to hit a fresh 52-week high today as well, and the stock of course has been in a good uptrend in the last few months, along with the entire PSU banking lot. So yes, that's the banking behemoth SBI that's handed in a better set of numbers than what the street was really working with. Aside of that, you had another stock that was in focus today, CDSL. Well, it has invited a downgrade from brokerage JM Financial after its second quarter earnings. Now, JM Financial has downgraded the stock to reduce from its earlier rating of hold, but it has left the target price unchanged at 1,500 rupees. Now, this implies a potential downside of over 5% from Monday's close price. That's from yesterday's close price. Now, the brokerage JM Financial has pointed out that CDSL's dominant position in the depository business is poised for more growth going forward, and capitalizing on the rising activity in the Indian capital markets. But continued reduction in turnover volumes, that could weigh on earnings going forward. It has pointed out that average daily turnover across BSE and NSE is down 18% on a year-on-year basis during the September quarter, and that could of course take a toll going forward. But CDSL's management has said that the integration with LIC is on track, and it's likely to be completed this month itself. Now, JM Financial takes note of this and says that this is a big opportunity, and it also expects it to increase or to lead an increase in the market share as well going forward for CDSL. But it's the valuation that's a concern, which is why JM Financial has downgraded the stock. It values CDSL at 40 times price to earnings on a 1-year forward basis, which according to the brokerage is expensive, and which is why it has downgraded the stock. CDSL of course came out with its numbers. It has reported 23% growth in its revenue on a quarter-on-quarter basis. Net profit grew over 36% from the June quarter. Revenue from both data entry and storage business and also depository activity business increased over 20% from the previous quarter. Margins also saw an expansion of over 500 basis points sequentially. Now, the stock is down in 5 out of the last 6 trading sessions. Year to date, the stock is down somewhere around 15%. Even then, JM Financial believes that valuations are pretty expensive. Well, that was, in fact, those were all the stocks that were on our radar. Today, of course, wasn't such a great day for trade, but let's see what Thursday holds. Tomorrow, of course, it's a market holiday. And we'll come back for trade on Thursday. We still have a few earnings to watch out for later this week. Sun Pharma is one that will be reporting numbers, and a host of other numbers as well will be coming out. But just want to point out globally a few factors to watch out for. The private employment figures will come out in the US tomorrow, and there has been a data blackout in the wake of the US government shutdown, which by the way enters day 35 tomorrow, and which will be if once it goes past the 35th day mark, it will be the longest shutdown in US history. So that's one thing to watch out for globally. And of course, as I mentioned, there's been a data blackout, so the Fed doesn't really have a lot of data to work with, which is why I think Fed chairperson had struck a cautious note when it comes to the rate cut trajectory as well. They had indicated that a December rate cut is not a given. Tomorrow, of course, the private employment data will be coming out, so that's something that the street will keenly watch out for. The ISM manufacturing data that came out yesterday wasn't all that encouraging in the US. So yes, these are some of the things to watch out for, and of course, as our guest mentioned today, for the Indian market, the next trigger, of course, would be any update on the US-India trade deal as well. Nothing has come by as of now, so I think that's something that the markets will watch out for in terms of trigger. But earnings-wise, the big ones came out today. M&M, SBI, they were much better than what the street was anticipating, but let's see how other earnings pan out throughout the week. But with that, I think we are completely timed out on this edition of Closing Bell. Thank you for staying with us and sending us your queries as well. Keep them coming in. Thursday morning, I'll be back and we will take up your queries as well. But have a good break, a mid-week break, and of course come back refreshed on Thursday morning. That's when I'll see you. Have a great evening as well, and stay tuned to Moneycontrol for all your other news and updates. Till then, have a good one. Goodbye.